Hey friends, welcome back to another episode of Making Sense of Your Markets. It's Friday, November 18th, 2022. Now, this is your monthly Making Sense of Your Markets version. I kind of downgraded doing them every single week because I felt like they weren't getting opened and watched by as many people as I wanted to. And it's valuable information. I put a lot of work into these videos, and this one is going to be very valuable. So what I wanted to do with this video this month is kind of bring you up to speed on what's going on, not only in the mortgage and real estate economies, but generally speaking, what does the high inflation rate, what is the Fed rate that's being raised at the fastest increase in over 30 years? What does all of this mean? We've got rumors out there that home values are dropping, and that's just not right. Year over year, they're up about 6 to 8% here in King County and Snohomish County, depending on where you're looking. So I wanted to dispel a couple myths. I wanted to share a bunch of data with you. I've spent the last week with my team putting together incredible data that's going to help you out. So let's jump right into that. But before we do that, I want to talk about a couple things that I've got coming up for you who are either soon-to-be clients of mine or past clients of mine, or I'm even going to throw this out on social media and YouTube. If you want to be a client of mine, this is going to be some super helpful information. So we've got a giveaway coming up in December, which is going to be incredible. So stay tuned for an email from me on our giveaway. The other thing, and I want to give back. I want to give back during the holidays for so many of my clients, great clients, that have recommended so many people to us over the last year. So we're gonna do a big giveaway in December. And then I've got a financial planning, I'm calling it a wine and wisdom event in January, where I'm going to bring an insurance professional, a financial planner, and myself, and we're going to talk about budgeting and how to protect your money and how to grow your money. It's going to be incredible. Both of these, all these are free, and they're just value adds that I want to give to you as a client. So let's jump in to first off, where are 30-year fixed rate mortgages today, Friday, November 18th, 2022? They have dropped from about 7.625 down to about 6.625 to 6.75%. Now, that's not a rate quote, it's just a range right now, but 30-year fixed rates have dropped with the recent news of inflation numbers looking like they're coming down. Now, that was the second thing I want to talk about. And so you heard me say over the last 3 or 4 months that as soon as the Fed can get control of inflation in America, 30-year fixed rates will come down because 30-year fixed rates are attached to the inflation rate. When inflation goes up, rates go up. 30-year fixed rates go up. When inflation comes down, 30-year fixed rates come down. Now, what helps drive inflation? I think what's helping bring down inflation right now is the Fed's aggressive approach to raising the Fed funds rate. So what I want to do right now, I told you I created a bunch of data over the last couple of weeks. I went out and basically put this together from scratch, did a lot of research with my team. And what you're going to see here on the screen is inflation, which are CPI numbers, Case-Shiller home appreciation year over year, 30-year fixed rates, and the Fed funds rate overlapped on top of each other since the 1970s to current. And I think what you're going to find out by looking at this is, and it may be surprising, which a lot of my clients that I show this to and I teach this to are shocked how closely they all move together. And this is what I've been saying for the past 3 or 4 months. Now, the outlier is the Fed rate, because the Fed rate is a rate that the United States of America uses to kind of tame inflation or to increase the economy, right? So let's eliminate that blue line and let's focus on the orange line and the red line, okay? The red line is 30-year fixed rate mortgages. And what I wanted you to see is that every time inflation goes up, rates go up. Every time inflation comes down, rates tend to come down. The other aha that I noticed by looking at this data is that every time 30-year fixed rates peaked or went way up, they only stayed there for about a half a year to a year, and then they came back down. So we had 30-year fixed rates go up in February, unprecedented increase, massive increase. We saw them go from 3% all the way up to 7.5% this year. Now, I think the trend is that we're going to see them come back down. Now, I've got data that shows that. We also need to continue watching next month's CPI inflation numbers. If those come down year over year, I think it's going to be the trend that we need to see to have 30-year fixed rates continue to fall down or lower. So What I wanted to do in closing is I wanted to also share some, social proof. You had CNBC come out. So on the screen, an article that I posted on social media showing that Fannie Mae is stating that by Q3 of next year, 30-year fixed rates will be in the 4s. That's really good information to know, because here's the thing. Don't let high interest rates right now keep you from buying the home that you really want to. You have an opportunity to buy a house right now without having to pay $100,000 or $200,000 of ask price. Okay, you have an opportunity to buy a house right now and choose from a few more houses than you would have had over the last couple of years, and keep your contingencies, your inspection and your appraisal contingencies in place. Buy the home you love right now. We're going to automatically refinance you next year when rates come down into the 4s. Okay, if you have any questions, please let me know. If you found this valuable, please share it with someone that it might help. I wish you a happy holidays. Have a great weekend. Bye for now.